In this video, we discuss about what is a spot market and how to do trading. Spot trading involves directly purchasing or selling financial instruments and assets such as cryptocurrencies, forex, stocks, or bonds. Delivery of the asset is often immediate. Spot trading occurs in spot markets, which are either exchange based or over the counter directly between the traders. When trading on spot markets, you can only use assets you own. There is no leverage or margin. Centralized exchange for spot trading manage regulatory compliance, security, custody, and other factors to make trading easier. In return, exchanges takes transaction fees. Decentralized exchanges provide a similar service but through blockchain smart contracts. Introduction: spot trading offers a simple way to invest and trade. With crypto investing, your first experience will likely to be a spot transaction in the spot market, for example buying BNB and at the market price and holding. Spot market exists across different asset classes, including cryptocurrencies, shares, commodities, forex, and bonds. You are probably more familiar with small spot markets and spot trading that you think. Some of the most popular markets, like the Nasdaq or NICE, New York Stock Exchange, are spot markets. What's the spot market? I want to tell you a spot market is a financial market open to the public where assets trade immediately. A buyer purchases an asset with fiat or another medium of exchange from a seller. Delivery of the asset is often immediate, but this depends on what's being traded. Spot markets are also known as cash markets because traders make payments upfront. Spot markets come in different forms, and third parties, known as exchanges, typically facilitate trading. You can also trade directly with others in over-the-counter OTC traders. We will dive into these later. What's it's a spot trading? Spot traders try to make profits in the market by purchasing assets and hoping they will rise in value. They can sell their assets later on the spot market for a profit when the price increases. Spot traders can also short the market. This process involves selling financial assets and repurchasing more when the price decreases. The current market price of asset is known as the spot price. Using a market order on an exchange, you can purchase or sell your holdings immediately at the best available spot prices. However, there is no guarantee that the market price won't change while your order executes. There also might not be enough volume to satisfy your order at the price you wanted. For example, if your order is for 10 ETH at the spot price but only 3 are on offer, you will have to fill the reset of your order with ETH at different price. Spot prices update in real time and change as order much. Over the counter spot trading works differently. You can secure a fixed amount and price directly from another party without an order book. Depending on the asset, delivery is immediate or typically within T plus 2 days. T plus 2 days the trade date plus 2 business days. Traditionally, shares and equities required the transfer of physical certificates. The foreign exchange markets also previously transferred currencies via physical cash, wire, or deposit. Now, with a digitalized system, delivery takes place almost immediately. Crypto markets, however, operate 24/7, allowing for usually instant traders. Peer-to-peer trading or OTC can, however, take longer for delivery. Exchange versus over the counter exchange comes spot trading is just limited to one single place. While most individuals will do spot trading exchanges, you can also trade directly with others without a third party. As mentioned, these sales and purchases are known as over the counter trades. Each sport market has its own differences. Centralized exchange come in two forms: centralized and decentralized. A centralized exchange manages the trading of assets like cryptocurrencies, forex, and commodities. The exchange acts as intermediary between market participants as a custodian of the traded assets. To use centralized exchange, you have to load up your account with the fiat or crypto you want to trade. A serious centralized exchange needs to make sure transactions occur smoothly. Other responsibilities include regulatory compliance, fair pricing, security, and customer protection. In return, the exchange charges fees on transaction listening and other trading activities. Because of this, exchanges can profit in both bull and bear markets as long as they have enough user and trading volume. Decentralized exchanges. A decentralized exchange is another type of exchange most commonly seen with cryptocurrencies. A DEX offers many of the same basic services as centralized exchange. However, DEXs match buying and selling orders through the use of blockchain technology. In most cases, DEX users don't need to create an account and can trade directly with one another without the need of transaction classing into DEX.